So much for the slump. After a few months of disappointing jobs growth, today's October employment report was anything but. In fact, it was the best number of 2015. Employers added 271,000 jobs last month. That's about 90,000 more than economists were expecting. The unemployment rate inched lower to 5%. Hampton Pearson digs into the numbers.
The blockbuster October jobs report produced the biggest monthly increase in new jobs in nearly a year and saw the headline unemployment rate drop to 5%, the lowest in 7.5 years.
You could try to spin it some other way, but it is really good news.
I think this is good news. If the Fed goes a quarter point, I don't think that kills the economy long from it.
The rebound in job growth even prompted a leading Federal Reserve dove, those monetary policymakers not in a rush to raise rates, to now say the first hike in nearly a decade could indeed happen in December.
I've said for, quite some time that, the real side of the economy is looking a lot better. We've seen substantial improvement in the labor market supported by our policy actions. And the other branch of this is, do we have confidence that inflation is going to get up to 2%?
In October, the private sector added 268,000 new workers, and job gains were widespread, including 189,000 service sector jobs, with big gains in professional services, healthcare, retail, and restaurants. Construction had its biggest gain in 8 months, adding 31,000 new workers. Average earnings, now at just over $25 an hour, have gone up 2.5% in the last 12 months, the biggest hike in 6 years. Labor Secretary Thomas Perez says employers in many parts of the country are raising wages voluntarily as the job market tightens.
The cost of attrition, the cost of training someone a new job is significant. And that's why the employers I talk to who've been raising their wages voluntarily, they understand that it's the right thing to do, it's the smart thing to do, and that high road is indeed the smart road.
Two soft spots in the labor market: manufacturing being hurt by the strong dollar, and energy still making cuts in drilling and exploration due to lower oil prices. For Nightly Business Report, I'm Hampton Pearson in Washington.